Wow, things have changed very quickly for Intel. So in this video, I want to dig into their Q2 earnings report and figure out exactly what happened. They had a loss for the quarter and their revenue dropped by 22%, which is even for me, I just did not think it was going to be that dramatic. And so we're going to talk about exactly what happened and where Intel is going from here. And this is the first video you watched of mine. My name is Justin. I'm an accountant by day. I've been in accounting and finance for almost 20 years, and I just enjoy researching stocks and looking at the stock market and just bringing you guys, my thoughts and opinions that are out there. So hopefully you get some value out of this. If you do, smash the thumbs up button, and let's just dig right into this earnings report. So it really was not that long ago. I think it was just a few weeks ago when I had a video on Intel, and I was really heavily considering buying into Intel with it dropping below, $40 a share, the stock price. I was thinking, okay, with a 4% dividend yield, things were looking pretty attractive. Now, this is a company that is really trying to pivot and trying to bring a new revenue stream. So keep in mind that historically the company has been in the chip, the processor chips for PCs and that sort of thing. They sold off their memory chip division. They're talking about spinning off their Mobileye division. Makes chips for autonomous vehicles. They're trying to start up, a foundry segment of their business, which is going to cost a ton of money. So they have a lot of things going on. And Patrick Gelsinger, who's been at the company for a long time, he left, went to VMware, actually got CEO of the year in 2019. Came back to Intel, now is their CEO, and he's also partnered with Zinzer, who was the CFO for Micron. So I think they have a good management team there, but there's a lot of stuff going on for Intel. This is not a company where you can really look at their historical numbers, in my perspective, and say, okay, that's easy. They've grown 7% or 6% on the top line. They've grown, 10% or whatever it is on the bottom line. They're going to continue doing that in the future. You can't really look at that business this way because they're changing a lot of it. And there's a lot of high risk, high reward type plays that they're doing right now. And we're kind of seeing that in the Q2 earnings. So as far as revenue goes, they dropped 22%, coming in at $15.3 billion for the quarter. And they missed on the top line by about $2.5 billion from what analysts thought they were going to come at. So that is huge. And if we look and dig into the different revenue segments of their business, the PC business or the PC chips, that demand dropped by 25% in the quarter. That is massive. Now, I knew that was going to drop because I did a video on Micron, which is a company that I own, and they were talking about having PC growth drop, and then having it. This is a few months ago, and then having PC demand for memory chips really kind of be flat for this year. Then it was going to go negative. So I knew Intel was going to have some issues with that, but I did not think there was going to be a 25% drop in their client computing segment of their business. That was a huge fall. Now operating margins came in at negative 4.6%, down 32% year over year. And what's really scary is their gross margin. So historically, the company has been between 50 and 55%. I would consider like a normalized gross margin for them to be around 51 or 52% right now. And even management talked that this last quarter. It dropped all the way down to 36%. That's massive. And the reason for that is, and management talked about this, that they did not do a good job managing the business for the quarter. They realized how much the PC business was going to drop in the quarter, and they didn't do a very good job managing prices within that, and so their gross margins significantly dropped. I mean that's borderline terrible. That really that's not forgivable as a shareholder, I think, just to have that gross margin fall that much. And so obviously that hurt their operating margins, but their also R&D and MG&A went up as well by about 17%. in the quarter. So you're having gross margins drop, then you have an R&D increasing. So essentially, you have a gross profit drop and your expenses increasing. That's not really a good combination, and ended up having a loss of about 11 cents for per share, which is down 109% year over year. So these are terrible, terrible, terrible numbers. Now, if you're thinking, okay, Intel's in the semiconductor business, semiconductors just had a bad quarter in general. That's not really true. I mean, if you look at Micron, which I just talked about, their revenue was up 16%. If you look at Texas Instruments, they had a decent quarter as well. So you can't just say that Intel's in the semiconductor business and all semiconductors were doing poorly. That's not necessarily the case. It was really just a terrible quarter for Intel overall. Now it gets worse because their guidance, they dropped it for this year. And if you're going to say, okay, they have a bad quarter, maybe they can just pick that back up in the next two quarters. That's unlikely. So they're reducing revenue by about $8 billion for 2022. So they were supposed to be, around like 75 billion. They're reducing that down to around 65 to 66 billion for this year. They're supposed to be cash flow negative, about $1 billion to $2 billion. That's not good. We'll talk about that more here in a bit. CapEx spending. They originally talked about 27 billion. Now they've reduced that down to 23 billion. I think a piece of that is the CHIPS Act, which is supposed to be hopefully passed by Congress at some point. It passed the House. I think right now it's actually with President Biden to be approved. But yeah, that's over $50 billion. A big piece of that's supposed to be coming to Intel. They're supposed to, from what I've seen and read, they're going to take a piece of that and then put it into their Ohio plant, which is supposed to be the largest plant in the United States, might even be the world. Like 750 acres, something like that. Just this massive plant, over $100 billion is supposed to be planned to go into this thing. And I think because the CHIPS Act hasn't been passed yet, they're reducing their CapEx spending down to $23 billion. They have to. They just don't have the money to be able to do that with the free cash flow and the cash on hand that they have. And they're talking about slowing down hiring as well for this year. So not great. And so we've already kind of talked about why they had a bad quarter. Obviously, the gross margins dropped. They didn't do a very good job on really managing the prices of their product and just how the demand was going to decrease also for the quarter. And this is what management had to say about the course. They said this quarter's results were below the standards we have set for the company and our shareholders. We must and will do better. The sudden and rapid decline in economic activity was a large driver, but the shortfall also reflects our own execution issues. So there's a couple of things here. So there's still supply shortage issues globally that we've seen from really stemming all the way back to the pandemic and are continue to happen now. Even like in China, they had that zero policy. They have zero policy for COVID. And so they've been kind of shutting down, reopening, shutting down, and so on. And right now, we're definitely in a global economic issue where United States, Europe, all that is dependent on other companies, other countries across the globe. And when you see countries like China, for example, shutting down and slowing production, that hurts everybody. It really does. And another thing that the company is seeing that is small and medium-sized businesses are really slowing down on purchasing PCs. There's a lot of concern about the economy right now. Are we in a recession? Well, we just had 2 quarters in a row with GDP dropping in the United States. So that is one indicator that we are in a recession right now. And so there's a lot of businesses, small businesses, medium-sized businesses that are slowing down hiring. We're seeing large businesses slowing down hiring. We saw Meta talking about that. We're seeing now Intel talking about that. So those are concerns. And their prices for their chips did not do well in the quarter. And so the company is saying, okay, yes, the economic drivers, there's a lot of drivers for the economic global crisis, for supply chain issues and that sort of thing that hurt their gross margins, but they did a bad job executing within the business as well. So it was a combination of those two things. And we talked about, gross margins dropping from, 57% all the way down to 36%. And when I say 57%, that's where they were a couple of years ago. But they should be at least in the 51 to 52% range. And management did say that is something they're going to get better, that we should see that recovery in that in the next quarter or two, being in that normal range. Another thing to talk about too is the company has about $4 billion in cash right now, about $22 billion in short-term investments. That short-term investments dropped significantly quarter over quarter. And I think their dividend is in trouble. I really, really do. If they're going to have negative free cash flow for this year and they're sitting on $4 billion of cash, I don't know if they're going to use that short-term investments to furnish their dividends. Keep in mind, they've been paying about $5 billion, over $5 billion a year the past 3 years, each year for the last 3 years for their dividends. And so that makes me concerned that their dividend is in trouble. Maybe they won't get rid of it completely, but I could see it drop, especially if they can't get their operating earnings back positive. Now, if they can get it back positive by next quarter, I'll change my tune here. But as of right now, if they're guiding negative free cash flow, they have negative operating earnings this past quarter, I'm extremely concerned about their dividend going forward. And this is, to me, as a company that people are buying into because of their dividend and their free cash flow. I mean, their free cash flow has been pretty stable. Now, again, they're spending a lot of money on CapEx, which is eating up a lot of that free cash flow. But I would be very concerned about the dividend right here. But I did listening to the earnings call, digging through 10Q and the earnings report. There are some silver linings here that I do want to point out. So first off, I do like management coming out and saying, hey, part of the reason why we failed this past quarter is because of us, internal execution. So Zinsser came out and said that. I like when management comes out and acknowledges their shortfalls. I do not like when management comes out when they have a bad quarter and says, hey, things are fine. We're going to return to normalcy. Don't worry about it, yada, yada. I like that management is putting pressure on themselves to do better. So that is one thing. They also said that the enterprise money, or like the large companies, they're not seeing a huge pullback as far as buying for like PCs and other things. So that should bode well for them. Again, they're seeing small and medium businesses pull back, but they're not really seeing the enterprise companies pull back overall for PCs. So that at least is a good thing. They also, Zinsser said this, their CFO, they think they hit the bottom. Price increases and a seasonal improvement in the fourth quarter should help margins stabilize to over 50%. So can take two things out of that. So that tells me that the third quarter coming up they're at right now is going to be problematic. So we saw Q2 gross margins 36%. I expect it to be better in the third quarter, but I don't think, even according to what Zinsser said, it's going to stabilize in the third quarter. It's not going to be till the fourth quarter that they'll see a stabilization. So that is not good. We're going to probably have another bad quarter that is coming up. Now, they did have Intel's new network and edge segment generated about $2.3 billion of revenue in the quarter, which beat estimates as up 11%. So that's about $2 billion out of their $15 billion. So at least we're seeing that part of their business grow. So again, that's a silver lining. We also have that CHIPS Act that I talked about earlier. That's with Biden right now. I believe it got passed by the House. That goes through. That's $52 billion. A piece of that will be flowed to Intel, which they can then put into their Ohio plant if they decide to do that. So that will obviously that would be a good thing. And then also Mobileye is still there that they do want to spin off. They talked about spinning off and it being worth $50 billion. But that was a year ago. With the market being down, semiconductor businesses, slowing down right now. It doesn't make sense for Intel to spin off. They're not going to get the value that they want to, but there's a lot of value there. So they're going to have to wait a while to spin that off, I think. But I think that's going to create a lot of shareholder value in the future. But I don't think we're going to see that anytime soon. Now, if we talk about valuation for this company right now, I felt that it's between $45 and $50 a share. But, based on what I'm hearing and what management is saying right now, I have to reduce the sales for this year and reduce their operating margins. And so if we revisit valuation right now and we do a projection over the next 10 years, I do think it's going to drop. And this is what I'm thinking. So I'm reducing revenue down to around $66 billion for this year. I'm also reducing operating margins down to 12%, which might be a little optimistic. We'll just put it that way. But I'm going to give them the benefit of the doubt this year. We'll kind of see how that pertains. I'm going to assume revenue is going to grow around the 5 to 6% range per year over the next 10 years. Historically, they've grown around 6%, so it's not that far off. Assume operating margins are going to get up to 28%. Over the next several years. And if I assume a market multiple of 10, which that's where they've historically been trading over the last 10 years, I get a fair price of $33, which is actually below what they're trading at. Now, if I say I think the market would be willing to pay a 12, that would move it up to $40. So unfortunately, I think valuation right now has taken a step back with Intel because of kind of what's going on. But ultimately, the X factor in all this is their foundry business. That is going to really create or not create additional revenue for this company in the future. So if they can, if they're able to establish that Ohio plant, if they're able to grow out their foundry business and give them a new revenue stream within their business, you can see really substantial revenue growth, operating margin growth, and ultimately stock growth in Intel. But there's a ton of risk here. Now, I do think they have a great management team with Zinser and Gelsinger to lead the company. So if anyone can turn this company around and get in the right direction, it's going to be them. Now, from a legacy business standpoint, they still have some really, really good margins within the company for their chip process. However, they're just spending a ton of money on CapEx. And so we'll kind of see how things kind of play out. But I would be very, very concerned about the dividend right now. And I would look to the third quarter on what's going to happen. For me, it's not a company I bought into, I've wanted to, but I'm not interested at all. I want to see what the third quarter brings on this company and kind of what management has to say. And I want to see them to be able to return by the end of the year back to the margins that they were at. And we'll just kind of see how that plays out. But I'll hear from you guys. I mean, what do you think about Intel right now? Do you think this is a huge concern? Do you own this company? Are you looking to just hold it, buy more, sell? I love to hear from you. Thanks again for watching. If you're interested in my valuation templates that I have, I do offer a couple of those on Patreon and teach you how to use those as well. You also get access to my Discord channel too. We have about, I think, 75 people, value investors, that are on there kind of talking about different companies we're looking into and kind of bouncing stuff back and forth. So it's a good community to join if you're interested. So I'll put a link down below in the video if you want to go check that out. Thank you so much for watching. I really appreciate it. I'll catch you on the other side. Take care and God bless.